Welcome, everybody, to the cryptocurrency track, sponsored by Blockdaemon. We're really excited to have you guys here in Chicago, and we're going to kick it off with a really cool panel. It's the new class of financial products. On our panel today, we have David Yerger from Redwood Digital Group, Havel Rodriguez from Adjoint, Armin Ibrahimi from Showcard, Zach Prince from BlockFi, and moderating will be Jeff Carter from West Loop Ventures. I'll let you guys take it away.
Awesome. Is this thing on now? Can you guys hear me? The technology works amazing. So I hate when you go to conferences and people just talk at the crowd. So I thought what we'd do is kind of let these guys talk about what they do and then let you guys ask as many questions as you want. Does that sound okay to you? I think you'll get more out of it that way than if I just sit there and ask predisposed questions. So to my left here is Armin. Why don't you talk about what you do in 20 seconds or more?
Sure. My name is Armin Ibrahimi. I'm the founder and CEO at Showcard. What we built at Showcard are mobile digital IDs where the users own their identity. So the data is on the mobile device, and the validation certifications that validate the data is on the blockchain. And there's no central databases, no usernames and passwords. But that's basically empowering the user to actually own their own identity as they work with different services.
Awesome. Havel?
Hi. Can you hear me? Yeah, I'm Havel Rodriguez, CEO and co-founder of Adjoint. We're based in Boston and London. We focus on enterprise applications of blockchain technology. So we don't really play in the crypto token space at all. So sorry to disappoint you if you're looking to hear about ICOs from me. We are more focused on digitized assets. We're more focused on what problems can we solve for large enterprises using underlying blockchain technology that we've built. So we focus broadly on capital markets and banking. That includes exchanges. We focus broadly on insurance, reinsurance, and commodity and energy trading. We do have some digitized assets that I'm happy to talk about later on as well. They're more around structured products. They're more around insurance-linked securities and more around asset-backed securities.
David Yerger, Redwood Digital Group. We are a cryptocurrency hedge fund. We differ from many of the 160 so cryptocurrency hedge funds, as most of them just go long Bitcoin and Ether. We do some arbitrage. We lend assets. We trade with some momentum systems. So we try to do everything as algorithmic as possible. Before that, I was with BitGo. BitGo's kind of a big name in the space, systemically important financial market utility player. Just acquired Kingdom Trust. So I was with them for 2 years. So I've been in the space since 2015.
So Bitcoin 100,000 by the end of the year?
Probably not.
I'm just teasing. Zach, go ahead.
Yeah, hi everybody. Can you hear me? Mic on? Yep. Zach Prince, founder and CEO at BlockFi. We're based out of New York, and we are providing loans in USD as our first product to individuals and businesses that own crypto assets. So we've been live with this product since December of last year. It's available in 37 states in the US currently. And we plan to fully scale out the product here in the US and then longer term offer low-cost financing in emerging and frontier markets where it hasn't been available before. And this is all made possible by the existence of crypto assets, which are natively digital and global by design.
All right, so I'll just start it off. What's the primary use case that people on your platform are finding?
Yeah, so we're using, we're serving individuals and businesses. They have slightly different use cases. For individuals, it's primarily been to get liquidity without giving up the upside in their crypto assets, which they're very bullish on, and also without triggering a taxable event. And they're seeing that they're using the money to do things like buy houses or make large purchases, home renovations, or just diversify into other more traditional investments because they're overexposed to crypto assets because of the run-up that we've seen in prices. And then for businesses, it's primarily operating capital and reinvesting back into the business, diversifying their balance sheet and adding debt to the equation, potentially as a consideration relative to raising additional equity capital. So we're seeing strong use cases on both the retail and corporate side of the equation.
Interesting. One other question follow-up that I would have is, last night we were talking about it's very difficult to short cryptocurrency because you can't borrow it. against it. So are you doing anything around that? Do you have any plans to do anything around that? I'm sure he would like to know that because shorting's an essential part of any transparent market.
Yeah, that's a trend that we're starting to see is groups wanting to access borrow off of an exchange, especially if you're running different types of arbitrage strategies where you're trading on multiple exchanges. The ability to borrow in a centralized kind of prime broker type construct is critical to being able to implement those strategies. We're not doing it today. We will be launching that product in Q3 of this year. Genesis Capital is the leader in that space right now. I think they launched it and had $100 million worth of activity in their first month or so. So there's a lot of demand right now that's not being met, and we definitely intend to lend crypto as well.
Any questions? Burning desire questions? No? Havel, talk about like how you came up with your business. Like, why are you doing what you're doing?
Sure. You know, I prior to joining this blockchain revolution, if you will, I worked at a hedge fund for 8.5 years, and I was a risk manager. I was also involved with OTC derivative trading, and got a first-hand look at some of the inefficiencies that we had in our back office when it came to margin calculations, when it came to reconciling collateral movements. So when blockchain technology came along, I saw this as a real good opportunity to remove inefficiencies that exist, in these legacy systems. And they exist everywhere. It's not just within banking and capital markets, but commodity trading. Anywhere there's an OTC bilateral trade that's occurring, there's room for improvement there. And so we decided to launch a company to create a very accurate smart contract platform that enables these transactions to be recorded on a ledger and then have workflow automation done on the back of those transactions.
Interesting. And then on the trading side, are you seeing, how do these assets trade differently than, let's say, wheat, right? Or traditional commodities? So my background is I traded commodities for 25 years, and I was on the board of CME and was one of the guys to take it from a nonprofit to for-profit. And so I'm familiar with the trading, but crypto trading, is it the same, different? What's the what are the differences?
Well, it's different because, can you guys hear me? It's different because CME, a lot of the trading is happening on futures, right? Futures markets. Whereas crypto assets themselves are digital bearer assets. So this is like the equivalent of actually physically delivering the grain or physically delivering the gold, except for you're doing it in a digital environment, right? So it's a digital good that belongs to whoever has the private key to that specific asset. So by and large, the crypto markets to date are delivery of the spot market, right? So delivery of the assets. So that's really what you have today. Now you've got options exchanges that are looking at coming on board. You've got futures markets that are coming online. You've got derivatives. You've got all kinds of cool things that are popping up.
What's the liquidity like? Do you see a lot of slippage in price, or are the bid-ask spreads tight? Like, if I was going to start trading what you're trading today, what should I be really wary of when I wade into the water?
Oh, well, the larger market cap tokens, there's better liquidity. So obviously, as you go down the list, you're going to have worse and worse liquidity. A lot of it just depends on what you're trading. If you're doing a large block trade, right, you're not going to have any slippage. If you've got $2 million on an exchange and you do a market order, yeah, you're going to blow through the order book. You're going to rock through that thing. So it just depends on what you're trying to do. In terms of liquidity, what we see on an average day for Bitcoin trading is around like $700 million traded. So it's not small.
It's not small.
Yeah, and that's on exchange. So you can assume that the OTC market is about the same size. So that's about 1.4 just in kind of the larger market cap cryptos themselves.
Awesome. So you were just in London. What were you doing in London?
We're at Blockchain Expo, and what we were doing was basically presenting our solution to the enthusiasts there. We also were meeting with a couple of clients, both in Italy and London as well.
So when you talk to clients, one of the things that some of the VCs in Chicago and I talk about is innovation theater, and how people like to talk innovation, but they don't embrace it. How are you finding it when you talk to clients about what you're doing?
So the story has changed a lot. We started the company in 2015, and back then, blockchain was a different beast, right? Right now, there's a lot more knowledge about it. And you're correct. In 2015, 2016, I was talking to a lot of the researchers in the larger companies, especially a lot of the financial institutions that we talked to. And there was just a lot of learning they wanted to do, and sometimes they would participate in POCs. We would grab those because it was also learning for us and just getting a foot in the door. That's changed a lot, and the dynamic has changed a lot. In particular, I would say since mid last year when all the ICOs started taking place, a lot of our clients have become educated. They've gone out of the way. They realize they can't ignore blockchain technology, cryptocurrencies as well, but it's really blockchain. So they come to us actually very well educated, and they understand what they could expect from us. So we don't spend as much time describing blockchain. We spend more time talking about identity management, what it is that we offer, and how we could solve real problems for them. And we're seeing the traction has changed, where they go far more quickly to a POC, to pilots, and also live implementations. Smaller scope still, but the path of progression for large banks in particular has been a lot faster than it used to be before.
Had some of the security breaches helped those conversations?
Every time there's a breach, I hate to have those breaches. Oftentimes my own data is in the breach, and I get notifications that tells me I've been breached. But each time we have a breach, ultimately it's a reminder of why higher levels of security or privacy are important.
Right.
Like the Facebook breach of data, ultimately GDPR regulation, even events like that, all of those are great for us because distributed technology really helps that.
Awesome. Now I get to do Oprah. She's smarter than me. Question.
What do you think that the biggest security hole or most common security hole that ICOs make?
What is the biggest security hole?
What is the most common security violation that ICOs have? Because there's no real OWASP for it yet. So, and this industry is like 2 years old. So, if there is any,
I'll give you one obvious one that we know of is people's identities. When they participate in the ICOs, there aren't as many systems available. We're actually launching a system using it ourselves to better protect the KYC data of users when they participate in that. Right now, there are passports and driver licenses and personal data and tax ID numbers that are emailed back and forth, not really guarded by the companies that do these ICOs. So I would say there are a bunch of different things. That's certainly one that as ICOs pick up more momentum, I think protecting that data becomes a lot more important. And I think it's being very loosely done right now because it was all done in a panic. Because all of a sudden it's like, oh, we have to do KYC on people. And well, how do we do it? People started exchanging emails on that.
Any other questions out here? None yet? Do you think that?
There's a.
Oh, I'm sorry.
Here as well.
You got him?
Thank you. First, just two questions maybe. On the blockchain side, there's been a lot of investment in blockchain from a lot of very large companies, whether it's JP Morgan or Goldman Sachs or American Express. And so far, I haven't seen a lot of commercial success. And where has there been commercial success other than, I guess, with Bitcoin or some of the cryptocurrencies with blockchain? That was with the CEO of a logistics company last week who's done a lot of investment in blockchain and is just not seeing the benefits of it yet. And then, I guess on the venture capital side, and I think, Jeff, you've invested some in cryptocurrency blockchain. Where have there been successes, if anybody can answer that, on how have the venture capitalists done in investments in the space?
It's a jump ball.
Sure.
Thanks.
No, you're right. Just piggybacking on the question that was asked to him is, how do you sell to corporations these days? I think the sell has to be really focused on what's the quantifiable value proposition of this technology for that particular use case. That's number one. Number two is, do you need 10 market participants to come together to adopt this technology? And so these two things have been some of the hurdles to broader commercial adoption. The other aspect of a hurdle to commercial adoption is technology is new. It's been around 2 years, 3 years. People are still figuring out what breaks, what doesn't break. which applications need privacy, which don't need privacy. What is the meaning of privacy? Having data on all the nodes and obfuscating it, is that called privacy, or is it really around making sure only two participants in a node that are party to the transaction can really just see the data and have the data and nobody else can see it? So there are all these questions still being answered that are preventing this adoption. From our perspective, what we've done is we've started with intra-firm use cases. So we're focused on Fortune 500 companies that have multiple subsidiaries spread worldwide that want to manage their liquidity better. So we've built a treasury platform for central treasurers to move liquidity between different subsidiaries without having too many bank charges in the middle. And this helps them, save on transaction costs, helps them save on lending fees. So if a subsidiary sitting in France can see there's cash sitting in the US, they can borrow from that subsidiary as opposed to going to the marketplace. So we are beginning to see traction with those kind of use cases where it's a very quantifiable value prop, and it's a very easy way to implement this solution into the marketplace by just dealing with one firm at a time as opposed to 10 firms.
Has actually implemented some of those?
So yeah, we've got clients in the insurance, reinsurance space, and the oil and gas space right now.
He probably doesn't want to say the actual company.
Yeah.
Sorry.
So I've got a different answer for that.
Yeah.
I got to see, in 2015, I got to do all these blockchain conferences and speak at some of them. And there are so many blockchain pilots, right? And they've been going on for years. And what I've seen is there's this thing called proof of concept or pilot purgatory. I mean, these guys are stuck reiterating these private blockchain, distributed ledger concepts. No, I mean, I hope yours is different. And they're stuck for years and years. What they start out with, the guys who say, hey, let's get into blockchain, they have this idea of all these aspects of public blockchains, right? Our blockchain is going to be just like Bitcoin, but better. And going to have all these great aspects. And what they end up with after they iterate, and they realize, oh, we need to do a distributed permission system instead of a permissionless blockchain. Permission system, and they iterate and they change things, and what they end up with is something very, very different, and it doesn't have all the aspects of it. One of the companies that I think is actually doing really good work is Chain. So Chain's doing a lot of private blockchain implementations for Fortune 500 companies. Well, they're not really making a ton of progress, but one thing that Adam Ludwin, the CEO, has said is the public and the private blockchains are much more of a continuum than you would think. So in order for the private blockchains to actually have some of the really, really beneficial aspects that accompany public cryptocurrency blockchains, they need to anchor into those public networks, which further aligns incentives for those public networks to really grow and develop and be more robust, right? Because now you've got JP Morgan relying on Ethereum and Ethereum's code base and Ethereum's development. So there's an alignment of incentives that accompanies that. And for the other part of your question, the venture capitalists, there are so many VCs that have invested in infrastructural companies and exchanges in the cryptocurrency side, as well as the private blockchain side. And so they're seeing much more robust returns out of these companies. But also now they're investing in ICOs. And how do we get at the protocol level? So VCs can participate in all these different areas. And I do think that the private blockchains will eventually get there. And have some value stored on those networks, but it's going to be some time. It takes 8 years to build good software. So,
Zach, did you want to jump in? No? Okay. On the VC side, it's, I would say that there's not been any blowout exits. It's not cash on cash returns, it's portfolio stuff. There's some smaller exits. I mean, Coinbase just bought a company, so if you were a VC investor there and they sold for 120 million, you made something. But I don't think there's any billion-dollar companies. That being said, if you think about when Microsoft started and when it went public, that the horizon's pretty long. So we're still in the early stages. I think there's enough here that you can start to sink your teeth in. I think the scary thing from a VC perspective is Satis just wrote a blog post on Medium where I think 81% of ICOs were frauds. That's kind of a scary thing. The 10% that aren't frauds that failed, that's actually a good thing. Because if we're afraid of failure, we're not going to innovate, right? So, and then I think the other 8% are actually trading. My math's right. So.
I'd like to Just real
Yeah,
quick.
go ahead.
I'll add a quick note to that. First of all, a lot of the clients that many of the blockchain companies, or actually I would say the space where blockchain companies are going after, require dramatic change for things to happen. And whenever you are that disruptive in nature, it's going to take a long time for it to happen because you're talking about lots of different things changing, including individuals and how they behave. Now, I think one of the things that has changed is rather than just pure research and POC and pilots that have been going on forever, and they will continue to go on, we're seeing more customers that have gone past that and want to do actual deployment, and they're working on integrating selected blockchain-based solutions into their actual core assets. But to deploy that, it's still going to take a long time to do. Anyone who's actually worked, we work in with financial institutions. Anyone who's worked with those before would know that deploying a solution is going to take a number of years to actually get there. So I think because of that, we see slow progress. And before you could say, hey, am I using a blockchain-based solution? The other thing I would say is we have, for our company, we moved away from actually just saying we're just a blockchain company. We come to these conferences and we say that to our clients, that's just how we do things. We really talk about what the solution is, and we take the approach of crawl, walk, run, which is start out very small, do the very basic set of stuff that can actually create a difference for the business, and then start going further. Because if you try to do the big thing of highly distributed, bring in different clients, then everyone's just going to wait and say, well, I'll wait for others to go first. Okay.
I'll just add, as entrepreneurs, our responsibility is to solve problems, right? You solve a problem, it creates business value. We get to keep a share of the value. That's the way I think. I agree with you. That's the way to think about these things.
Two quick questions. Howell, you had mentioned something about asset-backed, and I'm just wondering, are you talking about financial, digital asset-backed, or are you talking about actually hard assets? And please explain that. And is it David?
Yep.
And you had also said something about Chain and their B2B approach and being innovative. Not to be named, but I met a very interesting person that joined Chain and left because he said they were going away from B2B to B2C. Have you heard that, and what would be the rationale for that?
Okay, I'll answer the first part, right? So we are focused. So the first use case we're working on with a company in London is around collateralized mortgage obligations. So we're digitizing the home loan and then allowing this company to bundle it up and securitize and sell it to end investors. So the underlying are these financial products. We are also working with a few energy companies in Europe around digitizing barge receipts. So when two large companies are trading with each other, they're just changing the ownership of this barge receipt. And this barge receipt is now available as a smart contract that can then be further collateralized, and more funding can be obtained against those collateral types. Does that answer your question?
I would like to talk about Dore. Yeah.
Okay.
So at BitGo, we worked with CME. So CME and the Royal Mint, who is the British Mint, we built a blockchain for them with actual gold. So the gold is custodied at the Royal Mint, right? Large gold counterparty, custodian. And it's tethered ounce to ounce. For every ounce that's in their vault, there's a token called RMG. And now that RMG token can be moved all around the world for much less, much quicker, and safer in a lot of regards, right? With lower transaction fees. And you can redeem that for the physical gold at any point in time. And those gold reserves are audited once a month, right? So there is digital, physical tokenization of things. Say what? The chain question, I truly don't know. I truly don't know.
That's a good answer, actually.
Yeah. So
I don't
I
know
think
who you're talking about.
I know who you're talking about because he left and joined a firm in Boston. But you're right, they're focused more, it seems to be, I can't speak to them, but it seems to be they're focused more B2C. We are more on the B2B side, so we don't run into them too often in that space, to be honest.
All right, in the back.
So I kind of want to follow up on that question a little bit. I think that a lot of the people here are aware of fairly sophisticated trading for these like base level cryptocurrencies and various ICO tokens, and we're also aware of the ability to create asset-backed tokens and even things that are more complex, like mortgage loans represented as a digital asset, where money flows are automated as part of that contract. My question is, are you aware of any active trading of those types of assets? So either digital assets that are backed by real assets, like the Royal Mint Gold token, or digital assets that represent complex agreements like lending or insurance. Are you aware of bilateral markets with liquidity for any of those types of assets?
I'm not aware of any, but it's a trend that I think you'll start to see over the coming years. The challenge that comes up is that you don't have exchanges that are properly regulated to be able to list these tokens. They're definitively securities because they represent ownership of something, and crypto assets have lived in this box of Bitcoin being a commodity, the rest having kind of a question mark over their head. So there aren't venues to trade them, but T0, Circle buying Poloniex and saying that they're going to get it set up with a BD and an ATS, and a few other projects are going to emerge over the next 12 months where you'll have a venue to trade these assets. And then the question is, which ones actually make the most sense to be traded? Will you see disruption of existing venues just because it's cheaper, faster, and 24/7 and more global than existing trading venues? So will those assets start to move over? Or will it be new assets? Fractionalized real estate ownership and people in different parts of the world being able to get exposure to commercial real estate assets, kind of similar to what you've seen with the crowdfunding trend here in the US on a global scale, or other things like gold or different assets being the primary assets that are traded on these venues. But it's going to happen. It's just a question of time. But today, no.
Anybody else want to answer that?
Yeah, so it's coming. It's coming. First they need, you need a clear regulatory landscape. You need regulated exchanges that are interfacing with the SEC or commodities, CFTC. And then you need, for anything that's physical to become digitized, there's going to be a trusted intermediary involved. So blockchains fundamentally are about removing intermediaries, right? And so you're adding an intermediary. So the intermediary has to not only be aware of the technology, but also understand how it works and how they can custody these digital bearer assets that they're being involved with and moving around, and how they're going to play in making sure that these physical are there to tether to the digital, right? So it's a lot of work. There's a lot of code involved in building these networks, and you've got a lot of pieces involved. So it's coming.
We have time for one more question. Whoops, sorry. Anybody got another question? I have one.
There's one right here.
Oh, sorry. You got the microphone. You can use this.
You had mentioned the contracts for the barges. Are you dealing with anything, I guess, more on a smaller scale from either oil and gas production, sales contracts out of the ground for certain terms, winter terms or summer terms? Are you getting any pushback from all the parties involved in something like that, from the scheduling and nomination on how to deliver on those contracts? A barge maybe seem a little bit easier than to try to move gas through a pipeline in the U.S. So.
That's a good question. So just last month, we joined NASB, which stands for North American Energy Standards Board. And they create these contracts that stakeholders use. So you have pipeline companies using the same standardized contract as the energy producer, and these determine these wholesale contracts. So we are working with them to take what they built, which are these standard contracts, and digitize it and put it into a blockchain framework where you have these smart contract workflow processes that determine cash flows, that determine how novation can occur as well. But we're still in the early days to answer your question directly. But NASB as an institution is very interested in using blockchain technology because at the end of the day, it helps eliminate these reconciliation processes that they go through, and that's cost involved in both the counterparties that are involved in a transaction. The billions and trillions of dollars of gas moving back and forth. So the savings are quite significant in that area. So you'll see something, I think, by the end of this year, I think in terms of a pilot or some sort of proof of concept. I don't like that term, but they'll probably use that term when they announce what they're doing.
Well, thank you all for coming. As a Chicagoan, if you're not from Chicago, welcome. Best restaurant city in the United States outside of New Orleans. And we got great weather today, so I hope you enjoy your stay here, and I hope you come back and build a company here. I'd like to thank these guys for coming into Chicago and being a part of the panel and answering questions. And I'm sure they'll stay around. Will you stay around to interact with people? Unfortunately, I have to go do my real job at West Loop Ventures after this, so I'll be back later in the day. But I really appreciate you all coming. In 2007, when I started Hyde Park Angels, to have a conference like this in Chicago, to have this many people interested in something in Chicago was not even in the realm of possibilities. So it shows you can build something. Bitcoin's in its early, or crypto's in its early stages, and I think there's tremendous gains to be made. So thank you all for coming, and enjoy the conference.